Hi, welcome to the Market Alert for Thursday, the 11th of February 2016. So the first part of the session we see Yellen actually speaking, and it obviously was of a positive tone until Senator Sean Duffy, that is, had a word with Yellen about a letter that he'd sent to her a year ago, this month, 5th of February, with regards to her speaking to Medley Global in 2012 and revealing some very sensitive financial information. It appears that she was subpoenaed in May to give this information and is still refusing to give it. So there was an exchange that took place yesterday, and I've included a link in the email that I send out so you can actually watch this video, and it's very interesting. I've never seen anybody cornered like she was yesterday, and without any sort of rebuttal whatsoever. So at the moment it's only allegations, of course, but a very interesting turn of events which then moved the market to the downside. And then we see the market bouncing back a bit during the quieter part of the session, and then that was it. Here the market was digesting the rest of the information. There was no direction given when she did eventually get around to talking about the economy. No change on her stance at the moment. 20-point loss here, 38-point loss here, but pull back with 40 points here and the 40 points there, but a very mixed session. And unfortunately she's going to be talking again today as well, so you can see the market dropping sharply 200 points on the overnight session, which is very frustrating when we could have quite enjoyed the ride down with this in the earlier parts, but the market digesting what she had to say there. If you look at the daily chart, you can see there the market coming off the highs, and now she's got nothing new to say, and very much the same again today. Then we can expect the lows to be retested in this market now. She's got nothing to offer at the moment. There is talk of negative rates being bandied about now, but she's got to check first to make sure that the US Banking Act actually allows for it. You couldn't make this stuff up. So let's wait and see what happens with regards to that. And there's no doubt there's QE4 coming as well. The US dollar is also on a bit of a slide at the moment. Gold and silver up also. Sharply up, that is. 8% on gold this year so far. Right, so news-wise today, we've got Yellen again at 3 p.m. Be interesting to see how she's brushed herself down and gets on with today's task of speaking to the Senate again. So let's see what happens. It's a half-yearly meeting. It's a 2-day event. Like I say, today is the second day. On the implied volatility, 22.92, up slightly yesterday as the market moved lower. So you'd expect that. Again, expect this to move further if we go down and retest the August lows, which we've spoken of before. Just on some other fundamentals as well, the commodities index, we'll start with this one. This moving up slightly. There's going to be a massive bounce in this market, in the commodities market, if the US dollar continues to slide as well. Don't worry about the Chinese devaluing the yuan and the renminbi. Worry about the US dollar moving lower. That's what you've got to keep an eye on, because that will really accelerate an inflationary thing. And then if Yellen goes for QE4, which I have absolutely everything that I own on the line that she will, and will go negative on rates to keep the Ponzi scheme alive, then without a doubt we'll see this commodity sector absolutely explode once more, and that includes crude oil as well. In the Baltic Dry Index, again 290, this continuing to move lower, and again at some point we'll see a turnaround in this, but it will be a very long time. Unlike the commodity markets, which will lead, the Baltic Dry will then follow, but not for some time. So 1200 highs in August of 14, we're now down at 290. There is a massive wave of deflation and slowdown and recession en route from the Far East. It's already starting, but forewarned is forearmed. Also, Deutsche Bank, if you've not seen what David Stockman said about CEOs lying on CNBC, also I've included a link on that as well. David Stockman was part of the Reagan administration, a very bright chap, and very well respected in the financial industry. And again, I've included the link in the email for you to actually have a look, but you should see the talking heads and presenters' reaction when he talks about how corrupt CEOs are of these major banks, and they're basically liars, which I have to say I couldn't disagree with, not mentioning any other central bankers by name. So 14.58 for Deutsche Bank, just so you can see. And what's important about this, that Deutsche Bank is actually trading below the 2008 lows. Also, we're going back to the Federal Reserve. If you want to watch a brilliant documentary, I'd like to recommend this one by James Corbett, absolutely brilliant, that shows the history of the Federal Reserve and also why it doesn't have to actually have an annual audit. They can withhold information with up to 5 years, and the reason for that is that the Federal Reserve is a privately owned bank. What a surprise. So if you want to know the history behind it and why it's a privately owned bank, and as it says here, the real truth of the matter is, as you and I know, that a financial element in the larger centres has owned the government ever since the days of Andrew Jackson. And obviously the element of larger centres is the bankers, the Rothschilds, Rockefellers, JP Morgans and co. But a documentary there well worth watching for those of you that are interested in this subject. Right, that's it for today. Let's hope we get a bit more directional volatility today, but yesterday was fairly sideways because of Yellen speaking. She can speak up up to 2 hours, so it is a bit of a pain, really, this Humphrey Hawkins testimony, as it's known, that goes on for 2 days every 6 months. Right, that's it for this morning. I will see you in tomorrow's edition unless there's anything else to report during the day. Other than that, have a great day. And as ever, thank you for your support. Fingers crossed we'll get a better day today with regards to the volatility and momentum in the one direction. As ever, thanks for watching. See you in the next one.